Hey, JJ here with the Art of Value. So today I wanted to focus on this one blog post that I saw from Michael Batnick, and has a podcast called Animal Spirits, which is really good. Recommended. I'll put a link to podcast in the description. And he has this blog called The Irrelevant Investor, and he put this post up on the 2nd of May called Comparing Two Blowups. And I thought it was interesting considering following on from yesterday, really. Said I keep coming back to this theme that things feel a lot worse than what's revealed by looking at how far the S&P 500 is from its all-time high. One of the primary reasons, and there are several, is the number of stocks absolutely blowing up. The names coming undone were the darlings of the pandemic, and so were particularly sensitive to their unraveling. And the speed at which they're doing it is breathtaking. At the epicenter of this is the ARKK Innovation ETF, which I've mentioned quite a few times throughout the past year or so, which peaked 306 days ago from the 2nd of May. Since then, it's lost 70 cents on the dollar. The best comp we have for such a spectacular rise and fall is the Dotcom bubble and bust. It's hard to believe, but ARKK's 70% decline from the top is worse than the NASDAQ 100 what the NASDAQ 100 experienced after the same number of days from its high back in March 2000. So he's got a graph here where it shows that it compares the ARKK ETF with the NASDAQ 100 over that time, the same number of days from the peak. And if you're on video on YouTube or on Spotify video, you'll see the graph there, or go to the blog, which I'll put a link to, and it's actually down 70%. ARKK was down 70% when he made this post, and the NASDAQ was down 60%. So he says, I won't make a call as to whether ARKK will play out the same way. Who knows? But here's what the full picture looks like. The NASDAQ would ultimately lose 82% of its value from peak to trough. So still a ways to go if ARKK was to do the same thing. As you know, the difference between down 60% and down 82% is not 22%. It would take the NASDAQ 100 another 327 days to bottom and would shed another 56% when all was said and done. So it's got another graph where it plays the NASDAQ total decline plays out, and we're over that 621 days. So it's more than half to go, and so ARKK down 70%. The NASDAQ eventually went down 82%. So will it keep falling? That's the question, and it's a long way to go. But there's an interesting thing about this, about ARKK investors, if people are selling and pulling out. So he goes on after the second chart. I don't have fund flow data going back to the dot-com blow up, but it's safe to assume that investors ran for the exits. So far, we're seeing the opposite with ARKK. Investors are still piling in. Almost $1 billion in new money has come into the fund since the beginning of the year, according to Ben Johnson. Are these new investors thinking they're buying on sale? Is it current investors doubling and tripling down? So there's that chart. The next chart is of that accumulation, year-to-date accumulation from ARKK of actually going up, which is quite incredible. And that's a link to Ben Johnson's tweet. He says, I'm still trying to wrap my mind around, this is Ben, not Michael. I'm still trying to wrap my head around the fact that ARKK is down about 50% year to date, but still pulled in 908 million in net new money. Theories: number one, investors are doubling down, which does appear to be the case. 2, shares are being created to short. 3, super volatile ETFs will find a market. What am I missing? So that's his tweet thread. It's on the screen if you want to go and follow that up. But it does appear that ARK investors are original investors are putting more money in, doubling down, or finding new investors, which is kind of hard to believe maybe. But I do know a few have just started investing in ARK now. One's a Tesla investor who's pretty much all in, and he's started investing in ARK at what he thinks is around the bottom. So Michael finishes, investors usually run from fires. This time they're running towards it. Time will tell if they get rewarded or burned. So the upshot is, if ARK continues to go down, and I could see one way that could happen, I've been thinking they could get trapped in their smaller positions because they have got some big positions in the smaller companies. They've got kind of big percentage stakes in those companies. So what if they go down more, if the market goes down there and they go down more, and some of them get into financial trouble, they could have a hard time getting out. It could take weeks or months to try and get out, and there'll be no buyers, so they might be trapped in there with prices plummeting. I mean, it was easy enough for them to get out of Palantir because the high liquidity. They got out like within a week, and it was a kind of surprise to many that they decided after one quarter where it was questionable, they just sort of got out quickly. Huge position they got out. And the other thing is that Tesla being the elephant in the room, if Tesla is indeed overvalued and that starts to go down significantly, I think they're back to around 10% position in Tesla, and so if Tesla plummets, that will bring ARK down even more. So will people still be doubling down, or will they be running for the exits then? It's really interesting. I mean, because I think this is an interesting story, and going back to the dot-com bubble with funds, I think Janus 20 was a fund that kind of imploded when the dot-com bubble burst. And as Michael's pointed out, it took a while. It took a long time for the bust to fully play out. So will this happen again? We don't know. Anyway, 70% is a big drop for ARK and for an ETF. And Kathy's been out there talking about we're going to have she thinks, no promises, but thinking to have a 50% compounding annual growth rate, 50% from that, and that was a few weeks ago. So presumably she thinks it's more now. But it's going to be really interesting to see how this plays out. And there are a lot of these kind of stocks that are down individually, of course, many, and some of them are big, quite large caps as well as the small caps. So yeah, interesting times. All right, that's all today. And like and subscribe if you like this. And you see in the corner here, if you're on video, The Art of Value. Join me on Twitter, The Art of Value. And we can have some conversations there. All right, thanks. See you next time.